Yes, indeed. Yes, indeed. This is your boy. This is the Bear Show.
I wouldn't be a good realtor or entrepreneur or anything beyond that if I didn't let you guys know where you guys could find me to utilize my services or to get more value from me. So please like, subscribe, comment, reach out if I can help you or anyone you know. Now, most importantly, enjoy the Bear Show. Yee.
Have the privilege and the pleasure to interview and meet with my boy, my guy, the legend when it comes to mortgage loans and broking, Mr. Kevin Odo of Green Haven Capital. Kev, what's happening?
None much, Joe. Thanks for the kind words. Happy to be on the show. Thanks for having me. Can't say enough about you as well. One of the best realtors we've ever worked with. The teamwork is there. I think we make a great team, and hopefully we can add some value to our audience today.
Nice, man. Absolutely. You know what? So to give the audience a little brief history, Kev came into my world, into my universe, because of the universe. And sometimes you just have these blessings where you network and people suggest people to you, and get to work on Kevin with the deal. And Kevin, he made it a point to tell me exactly what we could do for my clients as far as closing and like the days that it would take to close a deal. And being more younger in the game, I had no belief that this could possibly happen. And Kevin absolutely proved me wrong. And the way his systems goes when it comes to mortgages and helping out his clients with the lending side is very, very impeccable. It's pretty much perfection. He is the best at communication. He communicates with not only the realtor, but he communicates with the client as well. And he makes his clients feel comfortable. And I mean, I kid you guys not, at the end of the day, we got our deal done exactly when he said. And I think it was 14 days.
Yep.
14 days. It was like incredible. So, I give my guy a lot of props. And, for people who are looking to buy a home or looking to have any questions, Kevin is definitely a guy who can definitely help out. And he's definitely very knowledgeable. And he's just a good person.
Thanks, Joe. Appreciate it.
Yeah. So, Kevin, tell us a little bit about yourself. How did you get into mortgages? How did it start?
I kind of just fell into it, man. I went to college at UC Irvine. I always knew in my life I kind of wanted to be in some sort of business, right? Didn't know what kind of business, but I knew I wanted to be in business because I knew, sky was the limit. The harder I work, the better I am, the more I can make. Right. So didn't know what I want to do. Got out of college, searching for something. My friends were working for a mortgage company at that time. They said, you should come check it out. Didn't really know anything about mortgages, obviously. I interviewed, got the job. Fast forward a few months, I was, grasped it. Was one of the top loan officers in the branch. A year later, I was one of the top in the region. It really fit my niche because I was good with numbers. I was good with people, and I like to help people. So I was able to close a lot of loans and help a lot of people. And then I left that company in 2005, and then I went to a broker, worked there for a couple of years, and in 2008 started my own brokerage at the worst possible time ever, but definitely survived that time. We had very humble beginnings, working out of a bedroom of my house. But yeah, it was good. Learned a lot. So started in 2008, 15 years later, here we are today.
15 years later.
Yes. So I've owned the company for 15, been doing loans for about 19 years now.
My God, that's incredible.
Yeah.
That's incredible. So
time flies.
Right.
Yeah.
So, when it comes to mortgages and when it comes to like the real estate side, I always get asked from clients who are seeking to embark on their home buying journey, like, hey, what are interest rates? And they ask me a lot of questions on mortgages and like numbers and stuff. Mm-hmm. I am by far like, I always refer, and Kev, because I'm always shooting you text messages like, hey, go to this guy. Right? Like, go to this guy, let him crunch things and let him figure out. So like you said, you're really good with numbers and stuff like that. Was that just always something that just came natural to you, or is that something that you embarked on throughout like school or whatnot?
Well, I was an econ major in college, so I was kind of always playing with numbers, so I learned it. And then I think, I've always kind of been decent with numbers, and like I said, I'm good with people and I like to help people. So mortgages isn't just a 30-year fix for everyone. It's really analyzing their financials, seeing what their financial goals are, not only for now, but maybe 5 years from now, and making sure they're in a position to, thrive and, really help build their real estate portfolios and just help them achieve all their goals.
Right.
Yeah.
And for, those people who are watching too, I do know that you're in multiple states. You're not just in California.
Correct. Yeah, we're licensed in California, Colorado, Utah, Texas, Tennessee, Maryland, and Oregon. So I got 7 states right now.
Nice. So where did Greenhaven start? Greenhaven just all of a sudden you're working for this broker and you're like, yo, man, like I got this. I can do my own. What's going on?
Yeah, I mean, I grasped the broker space for a couple of years while working for this company. Like I said, it was end of 2007, 2008 when things were changing. That company started not performing so well, right, because of the market. And it just really, I didn't know any better. I was young, 26 or so I just took a leap of faith. I said, I could do this. I'm gonna start my own company, and I did it, and I never looked back.
Man, that's awesome. So here we are today.
Yeah, here we are today. So
nice. So today's episode, we wanted to really talk about first-time home buyers, loans and opportunities for first-time home buyers. So when it comes to talking to people, whenever they're like inquiring information or first-time home buyers, they're trying to figure out where to start. Okay. Like, where does one start? And then we'll go into talking about more about what FHA loans are and stuff like that.
I mean, when you're looking for a house, I think we can agree that the first step, if you're not paying cash, is to get pre-approved.
Right. You
want a loan officer to look over everything, see what you qualify for, look at your options, kind of just figure out your budget to make sure that you're looking at homes that fit your budget and you're putting yourself in a payment you can afford, really. Yeah.
Right.
Yes. And that pre-approval process is basically can be done in numerous ways, but the most common way is just filling out an application online. It takes 10, 15 minutes, ask you a question about your income, your assets, your employment. Then I'll have you upload, specific documents based on what you put in that application. We'll review it, kind of give you an idea of where you stand. And then from there, once you're pre-approved, you can kind of start looking for homes.
Nice. And then, so going as a first-time home buyer, we do have these things called FHA loans. What are FHA loans?
So it's just a type of loan. And here's the thing. You don't have to be a first-time home buyer to get an FHA loan.
Oh, wow.
Okay. FHA is sponsored by the Federal Housing Administration. Okay. So the government-backed loans. The beauty of an FHA loan is you only have to put 3.5% down to get into an FHA loan.
Nice.
And when you compare it to a conventional loan, which is a different type of mortgage, the interest rate is generally a little bit lower.
Yeah.
But it also has a mortgage insurance premium, which could be a little bit higher than a conventional loan, but it really depends on your credit score. So now with where rates are, I would say if your credit score is in the low 700s or below, an FHA loan is going to work out better than a conventional loan for you. FHA loans are more lenient when it comes to underwriting. Okay. Believe it or not, you can get an FHA loan down to a 500 credit score.
Wow.
Yeah. Yeah.
Wow.
So, but if your credit score is less than 580, you have to put 10% down. But if your credit score is 580 or above, it's possible to get into an FHA loan with just as little as 3.5% down.
3.5% down.
You don't need a lot. And it could be a gift too. So if you have, a family member or a close friend or anyone with a little bit extra change that can help you out, I mean, that's one way to help you get that 3.5% as well. And it also allows for more seller credit too. So if you need help with your closing costs, an FHA loan would allow for at least a 6% seller credit to help you pay for any closing costs. Yeah.
A 6% seller credit.
Mm-hmm.
Nice. Yeah. So for those people who are watching this or who will watch this, what is a seller credit? That's 6% seller credit. What is it?
So when you buy a house, there's always closing costs, right? There's closing costs could be for your property taxes, homeowners insurance, for title fees, transfer taxes, any lender fees. There's costs that incur when you buy a house. It could be anywhere from 1 to 4%, 5%. Just kind of depends how your loan is structured. Now, a seller credit will basically cover those closing costs because the seller would basically give you a piece of their equity or help cover those closing costs when you're buying a house, so you don't have to pay those expenses out of pocket. So it'll help you get into a home with really a minimum amount of cash.
Right. So this is definitely the way that realtors come in hand to realtors team up with people like Kevin in order to maximize opportunity at writing the best offer for you in order to have that potential of getting that credit.
Correct. That's why we talk about all the financial goals up front. We talk with with the realtors as well, with you, Joe, up front. Say, look, this is how we got to structure the loan. This is going to work best for them financially. They're going to need X amount in seller credit. We're going to do X, Y, and Z. And, we'll come up with a perfect plan that fits your budget. So the house just, meets your financial goals as well.
Nice. Awesome. So you talked about the potential of the 500 credit score. And then we talked about the 3.5% down payment for FHA. Is there any other qualifications that we need to know to make it a success for somebody getting an FHA loan?
Well, if you're a first-time home buyer and you don't have any, or if you're not even a first-time home buyer and you don't have any FHA loan, no, not really. I mean, those are the credit score requirements.
Okay.
They are more lenient on debt to income ratio.
Nice.
So FHA loans are loans where you can go over 55% debt to income ratio and still get an approval. Conventional loans typically only go up to 50%. So they're a little more lenient there. FHA loans are also more lenient when it comes to like any derogatory past like credit history. So if you ever owned a home before and you've had a foreclosure, you only have to wait 3 years after that foreclosure is up until you're eligible to buy.
Wow.
Or if you've had like a Chapter 7 bankruptcy, you only have to wait 2 years after that bankruptcy has been discharged. And, if you had a Chapter 13, you only have to really wait 1 year after payments have elapsed. So when it comes to things like that, they're a little bit more lenient. So even if someone has, a little bit challenged credit or it's not perfect, you shouldn't be discouraged and think you can't get a house or can't get a good rate, because there are options out there. There's even down payment assistance programs for FHA loans that can fund that initial 3.5% too.
Oh, wow. What do some of those down payment assistance programs look like?
So the most common one here is CalHFA, right? That's a program where you can get your 3.5% covered. You have to have a 660 credit score to get that. There's some income restrictions on that. That one, you do have to be a first-time home buyer. And there's other caveats that make it, maybe a little tougher to get the loan, but the program is available. It's a little bit stricter on your debt to income ratio. Like they won't go over 50%. Sometimes they only max out at 45%. It really depends on what your credit score looks like. And there's also other programs too. There's another program where we can actually go down to a 580 credit score and you don't have to be a first-time home buyer.
Oh, wow.
So there's just a variety of options out there. So really, without going into too much detail, it's best that a loan officer really just examines your whole financial profile and see what is going to work best for you and go over all different options, because there's so many programs out there and you want to make sure you're aligned with an experienced broker who has options and is approved with multiple lenders that can offer you all these different programs, because brokers they really operate independently. You could talk to me, I'm a broker, or you could talk to another broker and you can get 2 different rates, tons of different programs, and you get 2 different answers, right? I might be approved with a bank that this other broker is not approved with. I have a loan product that he can't offer. My margins might be lower than the other brokers. So even if we're comparing loans at the same bank, I could be charging less than another broker, even though we're using the same wholesale lender.
Right.
So it's good that, you can't just say, oh, I talked to one broker, you can't do it. We all operate independently. So if one broker says no, there's a high likelihood another one could still say yes.
You know what? And that's awesome. And that leads actually to another question I have. Because you are your own brokerage and, you and your team do such a good job, what separates Green Haven from like a standard bank or, some of those other bigger, some like Guarantee Rate or Loan Depot or something like that?
Well, I mean, I think one of the main benefits of being a broker is being approved with several wholesale lenders and being independent, right? We can go to different banks for different programs, but we can also go to different banks for different underwriting. So
Right.
different banks have different underwriting tolerances. We've seen it plenty of times where we had a scenario that's not totally black and white, right? There's a little gray area how things can be interpreted. Bank A, B, and C says, no, we don't like the income on this. We're not going to calculate it this way. The debt ratio is too high. Bank 4 or Bank D is like, we will do this. So we have the ability to really navigate and adapt to different scenarios and find the right lender. And it's not just the underwriting, it's the pricing too. We constantly have banks fighting for our business. So when I'm approved with 30 different banks, one bank could turn off their pricing real quick, because they constantly adjust their margins. It's risk tolerance. But another bank could turn it on. So when I'm shopping loans for my clients, I could have, United Wholesale at the top of the list one day. Next day, it could be Rocket. It could be whatever bank I'm working with, right? So we have a list of banks we can work with, and they're constantly adjusting their margins. So we have the ability to really just always get competitive pricing, because when you work with only one bank, you're kind of subject to whatever pricing they have. But we have the ability to adapt and really just see who's giving you the best rates and who's going to do your loan based on your loan circumstances and meet the timeframes we need.
Right.
So
that's awesome. And that's really good information. So, to those out there, just to kind of like go over the process. If you're considering being a first-time home buyer, you're considering using these options, right? The process that we talked about, number one, first step is to get pre-approved. This is where picking your mortgage broker is the most important step, because you want somebody who really communicates with you. And you want somebody who has those options to go out to those different banks and have those different opportunities in order to get the options for you, because everybody is different, right?
Yeah.
And in this market, I get asked a lot. There's a lot of people who are sitting on the fence, right? They're sitting on the fence because they don't know about these different options. They fear the fact of like making that first step of seeing what their buying power is. And that's why we always suggest and direct people to talk to mortgage brokers. Kev, you get my texts all the time.
Yeah.
Where I'm just like, hey, do the first step, because it's not a scary process. It's actually a very informative and knowledgeable process, because you get to know more in depth what your buying power is, and you get to know what reality is and what's more realistic, and you get to know what your situation is and how you can best formulate a plan that caters specifically for you.
That's
okay.
That's true.
Right. So, I lost my train of thought just a second ago, but what I was thinking of is, when going in and getting pre-approved and taking advantage of these FHA loans, people, we're seeing interest rates, soar above the 7s and even hit the 8s, right? Yep. We're seeing opportunities come and go as far as like what interest rates were and what they are now. And it's funny to me because sometimes people, a lot of the times, I think we got very spoiled by what the interest rates were during COVID, right? It was like the 2 to 3%. And everybody is sitting there, oh my God, the interest rates are so high. And then I talk to other people who have bought houses back in the day, and they're like, yo, man, my interest rates are like 9%, 10%, right? Yeah. Like the standard, like 6 to 8 was like a blessing to those people back in the day, right?
That's true.
But
you know what I tell people? If you look at historically, like in Sac County, home prices have appreciated by about 5% per year. If you do the math, you bought a house for, $500K today. I mean, it could potentially be worth $800K in 10 years.
Right.
And the reason for that is because inflation. What you can buy for $1 today, you're not going to be able to buy for $1 10 years from now. So that's why home prices will continue to go up. Yes, there'll be ups and downs throughout the past, but we have to focus on the long-term benefits of home ownership. Interest rates, however, they do change. You can never change the price you pay for a house, but yes, you can change that rate.
Right.
And let's focus on not the rate, but let's focus on the payment. Let's
Right.
focus on affordability. Let's focus on what payment you can afford in comparison to how much you're paying for rent right now.
Right.
We don't put a
Hello.
rate on your rent, but rent does not go down.
Hello.
It may, but historically, rent has probably increased by at least 6% a year too. So, whenever your mortgage payment is today at an 8%, 7%, is most likely going to be your highest mortgage payment because you wouldn't refinance for a higher payment.
Right.
Right? Like you wouldn't say, oh, I'm going to go from an 8 to a 9. It just wouldn't make sense. So you only have the potential to reduce that payment in the future or leverage your equity to buy another house or pay off debt or do something to lower your total monthly debt. So,
Right.
that's
why we came up. That's why the term is out there. Marry the house, date the rate.
they've been dating it for a while, but I mean, there's things out there, but temporary buy downs, very popular today. I mean,
Right.
Regardless of what people hear on the media or think they can or can't afford, or if they think rates are too high, there's still things out there that can help them get a lower interest rate and maybe even secure a property at a better price right now. A lot of buyers are sitting on the sidelines, scared to get in.
Right.
That means less competition, more chance of you getting these seller credits or other things to help you get a lower rate. And, in the long run, I think it'll pay off for you guys.
Well, then also getting these houses without completely overpaying for them.
Exactly. You're not going against 20 offers or anything like in COVID. It was ridiculous.
Right. I always bring up the point when I talk to people who are looking to buy, right?
Yeah.
They complain about the interest rates, and I'm like, okay, yeah, the interest rates are higher than giraffe ears right now. We get it. I wanted to say I said giraffe ears, but I meant something else, but I kept it clean.
Yeah.
But the interest rates are high. But the question I always ask people and always bring to the table is, if you had the opportunity to buy a place and you had 2 or 3%, and you were to overpay for that house in order to get it, right? Would you rather do that, or would you rather get that same house in a time where not too many people are out there, and you're probably realistically getting more of a humble market value for that place, which is at the end of the day going to help you build more equity, and it's going to put you in a position to skyrocket your investment on an asset you just bought for yourself?
Yeah. I mean, I would rather buy now at 8%.
Yeah.
Gain a year from now, gain that 5% equity or whatever it is on average, refinance to a lower rate, maybe remove mortgage insurance if you're putting less than 20% down, using your gained equity to your advantage, than having to buy at a lower interest rate with increased competition. When rates go down, it's going to bring more buyers in the market. There's not a lot of inventory. It's not like we're going to have the inventory to support all these new buyers when they come back in the market. So it's just going to increase competition, and people are going to end up overbidding again for homes.
You know what? And I think on top of that, to prove your point even more so, I think that COVID and the pandemic made a new template, right? So even if things did come down, I feel like people knew and know what people were selling their houses for back then. Yeah. Right. So even when if the time comes back, I don't think it's ever going to be that low, but we just never know. But even if those times come back, there's a formula now that people know. There's going to be a lot more inventory out there because everybody's going to try to take my perception and my opinion about this is everybody's going to try to take advantage of that. Right. And those people who are buying in at the 2 to 3%, the 2 to 3% need to realize and actually have that information and knowledge spoken to them that they're perhaps maybe spending more for that house for the opportunity to live that American dream and buy a house, right? Yeah. As compared to, 8-7%, getting something where the housing market is more in a humble state where they're not completely overpaying for something, which in the big picture will actually make them gain more. So you date the rate because the rate could always change based on what Kevin said was, hey, you can refi. Yeah. And you marry the house because that house is something that you actually like. So as much as I don't want to tell people as much as I want to tell people to don't be scared of the interest rates, I want to throw out a huge disclaimer that I say don't be afraid of the interest rate, but I want to overemphasize that you need to be more in tune with your own finances, because you don't want to overextend yourself just trying to capitalize on the American dream, I guess you could say, right?
For sure.
Um,
I agree. And when we take applications, that's one of the main questions I ask is what is the maximum payment you actually feel comfortable paying? Because
right.
the maximum payment I qualify you might be a lot more than the actual payment you feel comfortable paying. So when we pre-approve you, we're going to find the right budget for you. We're not just going to max out whatever you qualify for. We want to work with your budget, make sure we're finding your house that fits your budget.
Right. So for everybody who is listening to this right now or is going to be watching this video, I have worked with Kevin numerous of times. And whether you work with Kevin, whether you work with someone else, the standard process is the first thing that you need to do to get off that fence is get pre-approved. Okay. You get pre-approved. Your mortgage broker and your realtor should be most importantly your teammates, right? They should be your teammates guiding you to having one of the biggest purchases of your life, a smooth transaction, and most importantly a success. Mortgage brokers to me, I feel, and this is why I always direct and send text to Kevin all the time, is because they're the most important piece. And when you're working with a good one, like my guy Kevin, and I'm shouting him out because clearly I'm biased, but when you work with somebody, they're going to directly put you in the right place that you as the individual need to be in. So if you're hearing things from person A, person B, person C, person D, person E, those people don't relate to you. There are opportunities and there are possibilities that you as that person might be able to capitalize on different opportunities, different programs, in order to put you in a position to, at the end of the day, reach your goal of potentially buying a house. And that's where all these different programs come into, whether it's FHA loans, like we talked about today and what it takes to qualify, or potentially, and if need be, down payment assistance, where when you connect with a mortgage broker that's incredible like Kevin, you get put in a position that's best for you. And like Kevin just reiterated, it's all about what you can afford. I want to take, I've shot my guy out a lot of kudos too, but I want to give you guys a personal experience because we bought our house through Kevin, and every single step, it's different when like you're referring people and you don't really get to see the process as it is when it's actually you, right? But our specific process that I could talk from experience, and like I said, I'm not trying to over market my guy whatsoever, even though I love him. But what I am trying to do is give that knowledge to everybody to know from my experience is he really set the table. He really set the table for us to really like know and understand what we could afford, what we could work with, right? He was very realistic. There was no overselling. There was never something that was going to overextend us, because at the end of the day, he actually cared about our personal finances and not putting us in a rough place where we were stressing or sweating. And every single mortgage broker out there that you work with needs to be delivering you guys the same level of service like that, because at the end of the day, when it's all said and done, it's all about putting you in the place to live this American dream, but being comfortable while doing so.
I agree.
So at the end of the day, we're here to help. You got our information at the bottom of the screen. You got Kevin Noto, greenhavencap.com. You can reach him and his team at 800-618-9508. You can also catch them on Instagram and Facebook. Instagram is super lit. To those of you guys who don't know what super lit means, it is, let me put it more strategically, awesome. Okay, very informative, gives a lot of great content to really put you and whoever you know in the best position in order to thrive and potentially hit that goal of buying a home. And yeah, man, Kev, man, anything else you want to add?
No, I really appreciate you having me on. Obviously, like, you know, we love working with you. We love working with all your clients. You know, our goal is to really just educate our buyers, our agents, everyone that we come around, just try to educate them to make better, smarter financial decision. I mean, we really focus on putting people over profits. We're not a company that has huge margins on loans. We have low overhead. I think in general, we make less per loan than most other brokers because I do a higher volume of loans, so I could kind of make it up that way. So
Right.
I really don't try to like charge any lender fees on loans. I really try to make everything extremely affordable, making sure they're getting the best possible deal and focusing on the relationship so that you and your clients will send us all of your friends and family because that's our goal.
Yeah.
We're a volume play. We're in it for the long run. We want to see everyone succeed. And we're in it to really build relationships with everyone we come in contact with.
Man, that's absolutely incredible, man. I appreciate your time, brother. Like I said, guys, his information is right below. Kev and I have actually talked. We're going to be coming to you guys at least once a month. If something changes, we'll let you guys know. But we're here to bring you guys value, and we're really in it for embedding everybody that we can actually bring value to. So stay tuned. Be on the lookout. You got our contacts, and let's go.
Yeah. Any questions? Hit up Joubert. We're here to answer them. We want to make sure that you guys, get all the information you need to make the right choice for yourself.
Hey, man, my brother, man, thank you so much for your time. And man, I look forward to connecting with you soon.
All right. Thanks, guys.
All right. You got it.
Peace.
Bye.
Yep.